What is going on, you guys, and welcome back to another video on the channel. If it is your first time here, my name is Brandon, and you can learn about our investing academy. If you're a beginner to the stock market, you can click that first link down in the description below. But in today's video, I wanted to come out and just share a couple thoughts, almost like a two-pronged video. One aspect talking about companies like Air Canada. Obviously, we're here in Canada. That's a company that I've been getting a lot of questions on. The cruise lines, so that being Carnival Cruise Lines, Norwegian, Royal Caribbean, those main three primarily have been the questions, and even just the other airlines like Delta. We've just been getting a lot of questions on transportation stocks, and I will be sharing my thoughts on those in today's video. And the second part of today's video will actually be kind of transitioning into a few stocks that I personally have on my radar. And hopefully these two topics will intertwine together. We're not going to be doing an analysis on the stocks, but just kind of some top-down looks at where the best places to deploy our money during this stock market crash. And hopefully that's what we can achieve in this video, is you can kind of see my insight on where I'm thinking to deploy my money in terms of which stocks as we go throughout whatever's to come in the stock market downturn. And I guess we'll start off with the first part of this video, and I can start with answering the question, do I own any of these stocks that I've mentioned, Air Canada, the cruise lines, etc., and do I plan to own any? And the answer to those are no, and very likely no. It's just not in my interest. It never has been to own this transportation sector. I've always found it to be a very, very difficult place to invest in terms of just the nature of these businesses. They're quite cyclical, and they're very closely tied to the economy, as we're seeing. Our economy kind of has come to a standstill, and these companies are pretty much coming to a standstill. They're pulling in no revenue. They're laying people off. It's trouble around the board, and rightfully so. Not to mention, this industry faces a ton of competition. Margins usually quite slim, and then of course they're closely tied to the price of oil because they need to buy jet fuel, or they need to buy a bunch of fuel for their cruises. It's just a tough space to be in. And I've just never had the interest in investing there. Now, does that mean that you can't go out and purchase these stocks at these pretty deep levels and turn that out to be a good investment? Absolutely not. That's not what I'm saying whatsoever. In fact, if I did have to put a little speculation on whether these companies are going to be fine or what's going to happen going forward, I probably think it's pretty fair to say that most of these companies, if not all of them, excuse me, they're going to make it through these times. I think it's going to be a struggle, but I think they're going to make it through just fine. They are such an important part of our economy, the travel space, and although the bailouts have been a little bit not so favorable right now, I do think the government wants these companies to be, they're a big part of our economy. So I don't think they're going anywhere, at least the main big name leaders that we're talking about in the space. So they'll be fine, but it will likely take some time. And that kind of leads to my approach on this, is that if I'm an investor, and maybe this is you, maybe you're somebody that's seeing a lot of YouTube videos on the cruise lines, or you're a Canadian here and you're like, hey, Air Canada stock has been slaughtered. This must be a good time to buy. The question that I always like to keep in the back of my mind when I'm choosing stocks to buy is to ask myself, where is the best place to deploy my money? Okay, you have 1,000 options out there in terms of where you can invest your money. Our goal as an investor is to find the best place for our money when we factor in the risk return trade-off, the types of companies that would fit well in our portfolio. And I do believe that, again, excuse me, I do believe again that these companies are going to be fine long-term, but the approach that I'm taking on this is just, do I want to put my money in such a beaten up area that will go through some struggles going forward before they can turn things around? I think that's fair to say. When I can go out and buy a much more quality, a much more well-positioned business, take for example, which will kind of lead into our second point of this video, stocks that I have on my radar, companies like the Johnson & Johnsons out there. McDonald's is one that's being hit quite heavily. We talked about Brookfield, a company that I just purchased a couple of videos ago. Nike's a company that I've been wanting to buy for so long, but haven't got the chance to. To me, I love the fact that if you're looking at these stocks, you're clearly looking for value, right? You're coming into it with the sense of, hey, these stocks are down so heavily, I want to buy low and one day sell high. I love that mindset. But the question that I would just ask yourself, like always keep in the back of your mind, is, do I really want to deploy my money here, or is there better areas? And again, it's not to say that you can't invest in these areas. I'll tell you how I would do it in just a second, but it reminds me of a very good lesson I learned. This goes back probably a couple years ago when I was at the time I was purchasing the stock General Electric, GE. And if you're new to the investing world, you're probably not so familiar with the downfall they had. But a couple years back now, a lot of issues the company was going through, layoffs, insurance issues, a lot of money being, pensions underfunded, a whole bunch of stuff. And I was just under the impression, and I still am, that I think GE will do fine long term. But the lesson that I learned in that position was that there are sometimes, and in many cases, there are better places to invest your money. So that's what it comes down to at the end of the day, is if you're looking to buy a stock, say Air Canada, for example, or the cruise lines, do you want to put your money in a cruise line, or do you want to go buy an Amazon, or do you want to go out and buy an Apple, or a Johnson & Johnson? Again, some of those more quality companies that will operate better during this downturn, they're positioned well to get out of this better than a company like a transportation stock. That's what I just want you to keep in mind, and hopefully that is a little bit of insight into my thought process on it. If you do really like these stocks, like if you really like Air Canada, for example, you really want to own a cruise line, you can absolutely buy it. I would just say that you want to do it and you want to approach purchasing the stock in a more responsible manner. And what I mean by that, at least what I'm trying to explain here, is if you came to me and said, hey, I got 50 grand to invest and I'm deciding what stock I should buy, Johnson & Johnson or Procter & Gamble, or I can go out and buy Carnival Cruise Lines right now, I'd probably say, hey, that's not the way to approach it. Like I would probably say, if you're gonna take 50 grand and just invest in one stock, that's probably not the way to approach it in general. But what I'm trying to get at is if you're looking between, let's call it a top tier company that has proven to get through these times and is gonna be just fine, versus Carnival Cruise Lines or even Air Canada, I'd probably lean towards one of the more stable companies, at least if this was one of your first stocks. Now, if you have a fully developed portfolio, if you've been investing for a while and you've got, let's say you look at your portfolio, I'm a big advocate of sectioning off portions of your portfolio so you have a balance and a structure that you're aiming for. If you look at your assets and you want to allocate 10% or 15% of your entire portfolio to these companies that are kind of struggling, these turnaround plays, which there is potential to make a nice return, no doubt about that, but they are higher risk, they are higher volatility, at least that's fair to say at a point like this. If you want to section off 10% of your portfolio to these types of plays, and the rest, the other 90% or the other 80% of your portfolio is in these stable companies, the good quality businesses, absolutely then. That may be a very fantastic way to approach a stock like Air Canada or Carnival Cruise Lines. But again, if you're just coming in with, hey, what's my first stock to purchase? I'd probably say, hey, these are probably not the first stocks that I want to purchase. That's at least the way that I would approach it. And again, it comes down to having a solid approach and a good foundation when you look at your portfolio and you kind of understand where things are. That to me is kind of an interesting way of answering the question. You know, if somebody asks me, is Air Canada a good stock to buy? Well, it depends. It depends on your portfolio. It depends on you. It's not a black and white answer in terms of yes or no. For some people it may be, for some people it won't. So hopefully that was a good, hopefully that shared some insight into the video, into this topic, because again, we've been getting a ton of questions on it and I just wanna throw something out because I know this is a trending topic. There's a lot of people curious about this at the moment. I did kind of mention it there very briefly, but the stocks on my radar, if you are somebody that's been waiting around for this, you wanna hear what stocks are on my watch list that I would love to pick up during this stock market downturn. I mentioned there are companies like Johnson & Johnson. Amazon is another one that hasn't dropped all too much, but they're one of my larger positions and I would love to see them come down. Apple is another stock that you know I'm a big fan of. McDonald's, I believe, is on a pretty significant dip at the moment, which I think would be another one to pick up. And the fifth stock, which I've been wanting to own for God knows how long, is the company Nike. And that, hopefully, just by looking at those tiers of names and just understanding the overall business of the overall quality of those businesses, you're kind of getting an idea of where I'm looking to direct my money in a tough time like this. It's companies that are going to be able to get through this, proven businesses. You guys get the gist of it, right? That's really kind of what I had to say in today's video. I would love to hear, and I really would love to hear what stocks you guys have on your radar. I know we asked that question on another video. We got a bunch of people saying Tesla. We got a bunch of, there was a lot of stocks I didn't really know about. And again, it's just a different preference, right? It's a different take. I like to lean towards the more quality businesses at a time like this. If you want to go for more of a higher growth play? Absolutely, and I'd love to hear from you. So leave a comment down below if you would like to share with the others on the channel. If you enjoyed the video and you enjoyed my thoughts, feel free to give this one a quick thumbs up, because that really is a great way of supporting the channel. And if you are new here and you're new to the stock market, especially if you're a Canadian that's looking to get started, click the first link down below. You can learn more about our Investing Academy, and we have a full-on training program all online where you can go from knowing nothing, from scratch, from peanuts for knowledge, to going out and building a portfolio. We'll help you set things up, and yeah, the whole process. That'll be that first link down below. If you enjoyed, subscribe, and I'll see you in the next video.